AMD just reported their latest quarterly results and the stock is currently down 7.7% after hours. Now currently this is the picture for AMD with regards to some pricing metrics: forward PE, EV to EBITDA, price to sales, price to free cash flow, price earnings to growth. So if you just purely look at price to earnings for the next 12 months, it sits at 37.8 times, which is the same as the 5-year mean. Of course, with the 7.7% decrease after hours, it's going to be a little bit cheaper. But if you look at price earnings to growth, that metric shows you that actually AMD is not that expensive at all, right? It's at 0.92. Usually anything under 1 is considered undervalued. Now AMD this year has been underperforming. It's only up 12.7% before reporting earnings. So now after reporting earnings, well, it's not going to look that great. But it's a company, it's a growth company, right? If you look at what the analysts are estimating, AMD is considered a growth company, especially if you look at the bottom line, if you look at EPS, that is expected to grow much, much quicker than the top line. Of course, the story here, the growth story here is data center, is AI GPUs. So we're going to talk about that as well because they gave us of course, the imported number in the earnings score. So stay tuned for that. I already covered the Alphabet Google earnings report. So if you missed that, that's going to be in the top right corner. We're going to cover as many companies as possible on the channel. So if you're new here, hit that subscribe button. We're going to try and reach 60,000 subscribers by the end of the year. Let's try and do that. Hit the subscribe button. It's free. You can always unsubscribe later on. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So zooming out a little bit and seeing what has happened with AMD over the last couple of quarters and years, and then seeing what the analysts are expecting, especially with regards to free cash flow. Now, with regards to revenue growth, as we've seen, 12.9% year over year, then 28.3% year over year growth in fiscal 25, followed by another 19.8% growth in 2026. But if you look at free cash flow in the last 12 months, it's $1.357 billion. It's expected to be closer to $4 billion for the full year 2024. But I don't think they're going to reach that because they already missed the estimates by quite a lot for this quarter. So when we're going to do the reverse DCF, we're going to use the trailing 12 months numbers, of course, including the one we just got. So if we look at the overall report, we can see a lot of beats, but a lot of misses as well. For the quarter, gaming missed by 19.7%. I mean, what did they expect? There's no new console that came out. So yeah, that was expected. The number was expected to be quite low. Operating margin also missed by 39 basis points. EPS basically met, and free cash flow completely missed their 58% miss. So free cash flow was expected to be $1.18 billion. At least that's what the analysts were expecting. Only came in at $496 million. Then as for Q4, revenue, small miss there, 0.7%. Gross profit, same thing, small miss, 0.9%. And then gross margin, a small miss of 11 basis points. Now, of course, year over year, the comparisons are quite good. As you can see right here, revenue increased 18% year over year and 17% quarter over quarter. Gross profit is up 24% year over year and 19% quarter over quarter, with gross margins increasing 3 percentage points year over year and 1 quarter over quarter. If we look at operating income, that's up 223% year over year and 169% quarter over quarter. Now you're seeing why that PEG ratio is looking quite good, right? Earnings per share up 161% year over year and 194% quarter over quarter. It's expected to grow quite fast in the coming quarters as well. Now here we already have a great chart by Main Street Data. They're extremely quick. I'm working to get a link for you guys. So if you want to try it out, it's going to be a little bit cheaper. So as we can see, this is basically the revenue trajectory and operating income from AMD in the last couple of years. Now what's interesting is that this quarter is a record quarter with regards to revenue, but not record quarter with regards to operating income. That was actually not much higher, but higher in Q4 2021. So yeah, it's a very interesting stage because now, of course, the company is bigger than before. Stock is higher. Revenue now is finally higher than before, but the profitability profile, not just yet. Then looking at the business segment, so of course, data center revenue is up 122% year over year and 25% quarter over quarter. Operating income increased 240% year over year and 40% quarter over quarter. So great. That's basically one of the growth drivers. The second one is the client business. That's up 29% year over year and 26% quarter over quarter. Operating income in that segment is up 97% year over year and 210% quarter over quarter. Then we've got the businesses that are basically dragging it down a little bit. So the gaming one, that's down 69% year over year. Nice. Quarter over quarter, that's down 29%. As for operating income for that segment, down 94% year over year and 84% quarter over quarter. Again, this is not a surprise. This is what management already told us in the last couple of quarters, that gaming and embedded is going to be quite weak. For 2025, it's expected to rebound slowly, not that much. And so here, basically zooming out a little bit, you see all the segments. And of course, you see that data center is taking a bigger chunk out of the overall revenue, client as well. And gaming is coming down quite rapidly. I mean, we've seen that already also with NVIDIA, right? Gaming was the biggest segment for them. Then it went down and down. Data center for them went down, but then data center accelerated like an F1 car. Gaming, not that much. And now data center makes up the majority of NVIDIA's revenue. I think we could expect the same thing happening here with AMD, but AMD does have the client side of the business. So they say here, revenue growth was driven primarily by strong ramp of AMD Instinct GPU shipments and growth in AMD EPYC CPU sales. As for operating margin, that was primarily driven by higher revenue, partially offset by higher operating expenses. With regards to the client side, revenue grew primarily driven by strong demand for Zen 5 AMD Ryzen processors, and the operating margin here increased because of higher revenue, partially offset by higher operating expenses, just like we've seen before. As for the gaming segment, well, primarily due to lower semi-custom revenue, no surprises there. And then operating margin is down. Well, why is that? Because lower revenue. Now, okay, I do want to correct myself because Sony did launch the new PS5 Pro, but to be honest, who's going to buy that? Then as for the embedded segment, here revenue decreased primarily due to inventory normalization among customers, and operating margin is down, same as gaming, because of lower revenue. Now, moving to the outlook for Q4, so they expect revenue to be $7.5 billion, plus minus $300 million, gross margin 54%, and they said during the earnings call that AI GPU revenue to exceed $5 billion in 2024. So we started the year at, what was it? They thought it was $2.53 billion, then you went up $4 billion, then last quarter $4.5 billion, and now they said not $5 billion, but to exceed $5 billion. So that's quite bullish. And so you might ask yourself, okay, why is the stock down if that's the case, right? If the report is so good, if they are expecting AI GPU revenue to exceed $5 billion, why is the stock down 7.7%? Well, to try and answer that question, we are going to do here a simple reverse DCF. So we've taken the free cash flow trailing 12 months, including, of course, the quarter that we've got right now. Terminal growth rate 4.26%, discount rate 8.22%. How you get that? You basically put those two numbers together. Terminal growth rate plus implied equity risk premium, you get 8.22%. Of course, you can change the discount rate, maybe more risk, less risk. That's up to you. I just use what the market implies. So the implied growth rate to justify today's price is 28.3%. So free cash flow has to grow 28.3% for the next 10 years to justify today's price. And as we've seen, huge free cash flow miss. So maybe this was, I don't like to say price to perfection. So maybe the stock did look expensive, plus guidance did miss, right? For Q4, as we've seen, not big misses. But if you're getting a small premium, and well, as we've seen with NVIDIA, they can continue to grow quite fast each and every quarter. Maybe the market was expecting the same for AMD, but I guess maybe that did not happen. Now, looking at what's going on here on a technical basis, we are getting quite close to the 200-day moving average, which sits at $152.5. Currently, at the time of making this video, the stock is at $153.97. So maybe tomorrow, if the market is green, because Google reported quite a good quarter, then tomorrow I think it's going to be Meta and some other companies. Maybe we're going to see the market buy this stock up, touching the 200-day moving average, quick rebound on the way up. Could happen, or it opens and it stays red throughout the day. I don't think it's the cheapest one out there. I think a lot of folks probably expected NVIDIA type of revenue, even though we know that it's not realistic because NVIDIA is the market leader by quite a wide margin. So yeah, that's AMD, of course, underperformance for the year. But I mean, if you zoom out, this is 10 years of Lisa Su's work, right? If you zoom out, this is where she started, right here at around $3 or so. It's now at 154. I mean, for those that are doubting her, I think you can give her the benefit of the doubt, right? Anyways, that's all I've got for you right now with regards to AMD. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.